Welcome back, friends and family. This is DeFi channel and you're watching Weekly Digest. Thank you so much for supporting me in this video series. I got actually very good response and the feedback on my last digest, and I've been asked to make a dive deep explanation of the strategies, how and what actually we could do if, for example, Bitcoin will go to 40k or even lower. Basically, what we could do. Anyway, so we are in the weekly digest, and our agenda for today, starting as usual from analytics, then going through the narrative power. I will explain you all of the cards that we had as an industry and that we played, and all of the upcoming cards that we're able to play. And you may actually understood that we are almost in the end of the cycle or even in the end. Then dive deep in the strategies, showing you my portfolio and exploring some of the greatest DeFi yields for this Christmas week. Merry Christmas, all of my subscribers and viewers. And actually, I would love if you guys will push this subscribe button, make a comment, and hit the bell notification, because it helped me to grow and it helped me to continue making videos for you with all of this digest. So what I want to start with, that's the cycle timing. Basically, we are coming to the end. We could see that right now we are in the last days of the cycle as it was last time, and that's basically okay. We have a couple indicators and the insights that's showing us that the trend and the narrative are broken. For example, the fear and greed index, we are in extremely fear region, and it may to continue because we're being already most of the time in this cycle in greedy and extremely greed region, and the next one phase is coming in fear and extremely fear. Then companies and the crypto treasuries, because we are right now on institutional rails, they're stopped in BTC buying, and they're even selling some of the SOL, but still continue buying ETH, which is good for ETH. But again, all of those ETFs, MicroStrategies, everyone, they do have a sell button too, and they may push it. According to the technical analysis, guys, that's the point. I understood you, like people trying to find the elephant figures on the charts, but basically, we could see the patterns, and if we could understood them, that's maybe better for us. That's why some of the people relying on the technical analysis. But what I see on the chart, I see just the trend, and what I could show to you that from the last cycle, we do have two major indicators. So the first one is a 50-week moving average. The second one is a 200-week moving average. And to indicate the trends is a 50-week moving average. And it's actually broken. We never broke it before on our last corrections, but this correction is different. And the price may go to 200-week moving average. That's why I have here these three blue lines showing you that this one region we may to reclaim if we will go up, and the price should be more than 105. This region is the deepest dip that we have in the current correction. If the price will go down, we are officially in the bear market. And this region is showing us 200-week moving average, which indicating that the price in this level is actually very cheap for BTC. Price in this level is fair value. Here are expensive, and here are very cheap. So basically, from the last cycle, the price went even lower than the 200-week moving average, and we may expect in this cycle the same pattern. For me, it means that I will start buying BTC when we will jump to this region, and I will use the dollar cost average to divide my portfolio into several buying points to accumulate Bitcoin. And that's basically the safest way what you could do right now. While we're still sitting in this region, I personally do not recommend do anything because it's very risky, means that we are never broke before 200-week moving average. And right now, all of the investors could be tricked. So basically, I'm not recommend you to do something. Let's wait. Let's see what is going to be after the celebrations in January. According to the long-term holders, I saw very good correlation here, because while that's the previous cycle, while the price are growing, the long-term holders, they are selling their position. That's why we have this sphere here. The same happened in the beginning of this cycle. So the price going up, and then the long-term holders are selling. The same last time when we broke 109k, but this time is different because the price going down, and they are not accumulating, they are selling. And we could actually check who are they. So basically, The sellers right now are the humpbacks and whales. That's the major BTC holders. Only sharks are still buying, and I'm not accounting fishes, shrimps, and crabs because they are usually tricked in the market. Basically, this showing to us that the capital exchanging the hands, the holding hands, and I still think that even from the last cycles, doesn't matter do we have institutional rails or not, they are just established, and we are exchanging the capital from the institutionals, from the long-term holders to institutionals, and it still means that we could be in the cycle pattern for at least this cycle. Future could be different, but this cycle I still believe that we are in this pattern. But going back to our institutional rails, they are actually based on the US economy. And basically, if the US economy is doing good, the BTC should grow up, which we could see on the S&P 500. S&P 500 is doing very good, but BTC is not correlating right now and is not growing, basically falling against the S&P 500. Why? Explanation of this, that the S&P 500 are driven by the AI bubble and the AI companies and the semiconductors and the whole industry, which interconnected with artificial intelligence. Basically the same if we will check the US dollar index, which showing us how weak or strength the US dollar, it became weaker than it was. And because of this, people are looking for some hedge. But unfortunately, this is not the BTC. This is gold. That's what we could see in the gold chart. And I could explain you why. Because basically, the correlation of the market cap from gold to Bitcoin are very different, dramatically different. Let's check. Basically, it's around 20 times. The gold market cap $28 trillion and the BTC 1.7 was 1.1. But again, guys, this is very big correlation here. Showing you the example, if you are Warren Buffett, you're basically selling your equities in a crisis into US dollar. But if you don't believe in US dollar and seeing it weakness, you may choose what? Gold, because it's actually the reserve for the different countries. And that's the point why gold right now taking the narrative. That's the idea. So coming back here, according to the global rankings of the companies, we grew up very, very good since last couple of years. And even in the companies, stocks, and equities, we may see some correction because we had very big growth right now. And the AI bubble could blow up, and we could see that the dollar may be more, may have more strength. Same gold could even cost more, and basically we could relaunch the market, because look at the S&P 500, how rapidly we grew up for the last 5 years. We may see some kind of correction in the near future. It could be a year or two, but they are able to prolong this time, so do not expect it in a couple months. But be ready. You need to have some stablecoins or even US dollar, because the investors will sell their stocks and equities in US dollar and then in gold. Why? Just because of the amounts of the liquidity. That's the point. Guys, I collecting everything on my platform. It's called DeFi Capital, and you could find here all of the lectures, the private streams, and the educational database fully for free, explaining you the blockchain in general and the economy and a lot of things from DeFi. Also, I showing my portfolio here. I started from 100,000, right now it's 220. I showing my profits, I showing my losses, I showing my monthly income, and everything documented on chain with the transactions. So basically, that's the real one example in the reality show, where you could check not only the screenshots, but basically all the trades on chain and all of the wallets. Same I start doing for the stock investments, because I'm hedging into the stocks from crypto. At least for next year, I will buy every month on a 5K some part of the stocks. I do have here farming templates, crypto analytics, going every week explaining all of the thoughts and what we could do according to the current market situation. So that's basically it according to the market analysis, and let's dive into the crypto narrative power. So guys, usually the cycles are based on the narratives, and we do have some cards to play. It could be the major events. Last time, how it was, for example, we had halving, we had BTC ETF, we had the Trump elections, and the narratives are helping us to grow up. And we actually outperformed every major event here and grew up to 126K. Then we have some bad narratives or bad events, like it was last cycle, the FTX crash or the Terror crash. Nowadays it was the tariffs drama. What are the cards we still left? Almost nothing. The last one, it's BTC reserves, but to play this card, like countries made to buy Bitcoin into the treasuries, but instead of the Bitcoin, they're buying gold right now. At the same time, why? Because gold are lived longer than the BTC. BTC is still young and the liquidity is still very, very low. So basically, from this understanding, I don't see any cards which we may to play in the near future. I think we need to retest the regions to consolidate. We need to prepare new cards for upcoming years and then build the narratives around them. What we actually could do with the strategies if the BTC will go down. So one of the best strategies are the DCA buying, and we even could boost it with opening a leverage up to 2x. But without this, we are still very safe. But with a leverage, our deposit could be liquidated fully again, but our growth could be up to 400%. So basically explaining this strategy, how it works. If we have 30k to buy BTC, we could divide it into 3 parts, and we could buy in the first buying point even 126k per BTC, then the second one 80k, and the second one 50k. Um, it help us to accumulate more BTC. Look at the numbers. For example, for first 10k, we could buy 0.8 BTC. For second one, we're already able to buy 0.12 and 0.20. And that may help us to accumulate more BTC with a lower average buying price. Then, if you want to use a leverage, you could put those assets into the lending protocol and borrow 2 times after the dips, first 15k and buy BTC, and the second 15k and buy BTC again. So let's go to the calculations to understood how it kind of works for us. So basically 30k are invested, 15k are borrowed, and on this 15k we could buy 0.25 BTC, as I explained here. It basically grew up our position to 45k invested with the 15k borrowed. This is a 1.5x leverage, and it may help us to get more reward while BTC will grow. Or if the BTC will fall, we could borrow again 15k and add it into our position, into our collateral. So the total invested will be 60k or 0.86 BTC. The total borrow going to be 30k, and leverage going to be 2x. Average price 69 per BTC. This may help us to accumulate Bitcoin while it's falling and while it's growing, and it will create as an average price. And you could boost it by creating leverage. Again, you could be liquidated up to the full deposit. If even on the 2x leverage, as I explained here, the price will drop on the 50% down, you may lose the whole position. So you may to be prepared and at least have some cash to repay the borrows, or you just don't need to use the leverage and only keep the DCA strategy without the leverage. May give you up to 100%, but again, guys, 100% of growth for the portfolio. Investing is not the playing in the casino. Investing is watching how the grass are growing in your neighborhood. So basically, this is it. What else we have in the strategies? The another one strategy which we could use are connected with the options. So we basically could have the full deposit in BTC, and we could hedge this with the options. Our risk is the premium payment, but again, if we are right, we could earn up to 50%. Still, we could buy just an options, and if we are right, we could earn up to 50%. But to build a, let's say, delta natural strategy, because buying BTC and hedging via options, it means the delta natural minus the premium payment until the maturity date. So how the things are works, for example, you could buy the put option here, and you may pay the premium payment. Then if the price will fall, you may have a profit, and you're going to be able even to earn some money. Again, to buy the option on a 1 BTC, you will spend around 6 to 8k for next 3 months, which will allow you to risk less than you will open the short position with the leverage, because if you will use perpetual future, you may lose all of your assets. So that's another one strategy. What else I would love to show you that we have 2 more strategies here. Shorting that altcoins to Bitcoin, again, liquidation of the full deposit, but grows up to 100%. How does it work? You could put your BTC into the cross margin on the SEX, and you then able to borrow that altcoins like Dawn or XTZ or Atom or Polkadot and sell it immediately into US dollar. Then you are waiting until the altcoin is going to 0 and basically converting your stablecoin back to the altcoin, paying back the debt, and calculating your profit or calculating your gain. Again, the safest strategy to show you is sitting 100% in the stablecoins invested in the DeFi. It is very safe, and you could earn up to 20%, and that's basically what I personally doing. But before this, if you are guys want to participate in DCA with a leverage, as I explained here, you may go to the DeFi Capital into the useful templates and check this template how to use lending protocols. This template explaining you how to safely use leverage on the lending protocols. That's actually what I've been doing for last year in this cycle, and that's how much money I earned. And here are I showing you the transactions when I open the position and when I closing position with profit. So that's not just um, some kind of educational book without the proofs. It's fully proved by myself. It's actually how I earned money. And that's what I'm going to do in the next cycle. You could check how it was, and you could check how I made it. Then, about the stablecoins, as I said, you could earn up to 20%. And for this, I especially using Syntropia. A very big part of my portfolio are sitting in Syntropia right now, especially in SynUSDX. And that's the asset management tool where you could provide liquidity, and the guys behind the Syntropia able to manage those assets and put them across the different farming opportunities and took the yield for you. Why? Because DeFi is actually not so safe place. And in DeFi, we have following risks. That's a stablecoin DPEX, wallet hacks, that's a locks and hidden fees, and the reward volatility. And the Syntropia are built especially to hedge the funds from these risks, because the asset managers are able to monitor the reward volatility and sell the reward immediately, and then they're able to control the locks and fees. They're able to check the wallets, and they're using special custody instead of regular wallet, which is very hard to hack. And also the guys had the monitoring on the stable coins. So basically they're preventing the defect. What they unable to prevent is a smart contract hack, because if the money are sent, they are sent and nobody able to do nothing with this. So that's basically what Syntropia is. And especially I'm sitting here in the position with my portfolio. We could check in the DeFi Capital. We could open the portfolio reports, and we could check it here. Basically, that's USDC in Syntropia. Yeah, this is it. Syntropia USDC Vault. So right now, my portfolio are consisting fully in stablecoins. 100% of the portfolio in crypto are in stablecoins. But I have a stock portfolio, and right now it's 12K, divided into 4 categories: is the semiconductors, batteries, defense, and electronic vehicles. So all of the detailed information about my portfolio you could find on DeFi Capital. And for this weekly digest, we are coming to the end. Thank you very much for watching, and see you in the next one.